I do want to put in perspective, the company is going to earn a lot of money this quarter. And so it's a very strong company. We made a terrible, egregious mistake. There's almost no excuse for it.
Welcome back. That was JP Morgan's Jamie Dimon admitting at the weekend that he was wrong about the risks his bank was taking. Now he is expected to act. David Enrich is here with me to discuss who is in the firing line. David, I guess that's the first question. Who goes, I mean, after all that?
Well, what we've heard is that there are at least 3 fairly senior people at the bank who are likely to be shown the door this week. The most prominent is the head of the Chief Investment Office, which is this global operation that was the source of the $2 billion plus of losses. Some lower level traders as well who are involved. But
any names?
Yeah, Ina Drew is the head of the Chief Investment Office. Bruno Ixel is the so-called London whale who was the trader who was kind of first implicated in this, and I think his boss, or his boss's boss, Achilles Makris, is also one of the names being floated around as likely to leave this week. But,
I mean, are these all London-based people, or?
Bruno and Achilles are both based in London. Ina is based in New York.
What about the chief finance officer? People are suggesting that perhaps he could go too.
You know, I want to be careful about how we characterize that. We have not heard any indication that he is likely to leave. There certainly are some people within JP Morgan who think that Doug Braunstein, the chief financial officer, has a lot of responsibility here. And the reason for that is, obviously, as the CFO, he's supposed to be responsible for the finances, but also back a month ago, when JP Morgan first talked about this publicly, he said something to the effect of he was, quote, very comfortable with the risk positions involved in this trade. And that, I mean, as Jamie Dimon said yesterday in the U.S., and their initial characterizations and initial assessments were just dead wrong.
I mean, that's interesting because he's basically admitted how wrong they were. Does Jamie Dimon's position start to look untenable now?
No, I don't. Well, you know, famous last words. I don't think so right now, and he has presided over one of the most successful banks in the U.S. for the past and quite a few years. And I think it's important to keep in mind that a $2 billion loss is very bad. It's very embarrassing, especially given how they were downplaying this. But it's a $2 billion loss in the context of a bank that's going to earn $10 or $12 billion this year. So it's by no means a crippling blow to JP Morgan. And Jamie Dimon remains, I think, one of the most respected managers on Wall Street.
I mean, that's a very interesting point that you're putting this all into perspective there, David. But at the same time, I mean, I gather that there was another loss that the bank sustained on Friday from this trade.
Yeah, what we've heard is it's about they lost roughly another $150 million. And that it could, right now the loss is about a little bit more than $2 billion total, and then it could go up as high as $4 billion. Again, that's kind of consistent with what Dimon said when he first announced this last week, that this could get another billion or so bigger.
What is interesting here, of course, is that it's not just you know, JP Morgan that's actually being affected by this. As Martin Esses was just pointing out, you know, global bank stocks are actually on the way down. Okay, Eurozone might be responsible mainly for that, but there is some suggestion here that there is a lot of fallout coming from Morgan as well.
Well, it's really, you know, it's hard to say what's connected to what. Certainly there are more sellers than buyers when it comes to bank stocks these days, but that's been the story of the past 2 years.
But again, it's back to this whole question of whether or not they're going to separate the commercial from the investment banking sides of the U.S. as well as, you know, other banks.
Yeah, that's not really on the table in the U.S., honestly. And there's a debate over proprietary trading restrictions and what role that would have played in preventing this loss if it was in place now. But
brilliant. David, thank you very much indeed for giving us an update on JP Morgan.